All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing I want to talk about is Shark Tank's Kevin O'Leary reverses his stance on Bitcoin. And he says crypto's here to stay and he invests 3% of his portfolio. So a super popular investor guy, TV dude, yada yada. He was basically on every single YouTube channel's advert at one point, so you could do a meetup with him or something like that a little while ago. Either way, Canadian investor and television personality Kevin O'Leary has changed his mind about Bitcoin. He previously called the cryptocurrency garbage and a giant nothing burger, but now he has invested in Bitcoin and thinks that it's no longer a fad. So I like how it takes 12 years for people to believe that it's no longer a fad. I actually think that digital currencies are here to stay, he said in an interview with CNBC last week. Most people that are willing to hold them, including institutions over the last 90 days, are willing to deal with the volatility. He says, I'm fascinated. I'm investing. I'm holding the 3% weighting in it between Ethereum and Bitcoin. The volatility sickens me, but I'm getting used to it. Well, the volatility is the fun part, Kevin O'Leary. Welcome to the crypto world. And finally, I'm starting to think about how do I invest in the infrastructure of mining Bitcoin. Oh, that's a whole nother route. Commenting on Bitcoin's volatility, O'Leary shared, given the volatility of cryptocurrencies, the main decision you have to make after you decide to participate in the first place is what percent of your portfolio do you allocate? For me, 5% is the maximum. So a lot of people listen to this guy about pretty much anything he says. So, hey, this is a step in the right direction for Bitcoin. Moving on, another step in the right direction, a minor one, but indeed we're moving forward with some popularity and just overall acceptance. Google Finance adds dedicated crypto tab featuring Bitcoin, Ether, and Litecoin. It's always Bitcoin, Ether, and Litecoin is like the first three things that are ever on just about anything. Google Finance has added crypto prices to the finance.google.domain. The section titled Crypto now appears in the Compare Markets category alongside conventional stock and currency markets. The section provides key pricing information for various cryptos, including Bitcoin, Ether, Litecoin, and Bitcoin Cash. Google's parent Alphabet, who also owns YouTube, which has consistently inked crypto users by banning educational and news content, often seemingly at random. Even Cointelegraph and CoinDesk, the two largest publications in the crypto news space, have been subject to suspensions that they have frequently or subsequently overturned after the video streaming platform confirmed they were not in violation of YouTube's terms of service. So there was this thing going around, it was a good few months back, maybe a year ago, where YouTube was just randomly banning cryptocurrency accounts. Apparently mine is far too under the radar to get banned, so I'm not cool enough to be banned. So subscribe to the channel, guys. Make me bigger so that I can get banned on YouTube, so I can be one of the lucky ones. So I can be so big that I get banned on YouTube. Who knows? Give it a try. It'll be fun. Clicking a button is super fun anyway. So, what's the point of this? Kind of useless, considering we have CoinGecko, CoinMarketCap, and basically every other thing, including the fact that Bitcoin, if you just type in Bitcoin price on Google, it just automatically shows you the price of Bitcoin on Google. But once again, a small step in the right direction of acceptance of the world of cryptocurrency. So moving on here. Robinhood expects to pay $26.6 million FINRA fine. So Robinhood, the popular stock trading app, which is total garbage in my opinion, announced on Friday that U.S. regulators were preparing to probe its trading restriction on shares of GameStop and others. The company said in a filing with the U.S. Securities and Exchange Commission that it's cooperating right now with investigations by a number of regulatory bodies, including the SEC, the Financial Industry Regulatory Authority, and the New York Attorney General's Office. New York is always suing people, always trying to get money from the crypto world, constantly. It's just always in the news. If New York Attorney General's office isn't in the news, it's fake news. In the SEC filing, Robinhood also said it is preparing to pay at least $26.6 million potential settlement with FINRA, not over the GameStop restrictions, because apparently nobody's going to get in trouble over that one, because, who does, right? Even the 2008 financial crisis led to literally only one person being arrested, but over trading outages in March 2020 and its option trading policies around approval and display. Robinhood in its filing said it is engaged in discussions with FINRA staff regarding a possible negotiated resolution of certain FINRA matters, including the March 2020 outages and options trading, and that it expects any resolution, if reached, would involve charges of violations of FINRA rules, a fine, customer restitution, a censure, and a compliance consultant. We have accrued in our statement of financial condition for the year end December 31st, 2020 of $26.6 million, representing the bottom of our range of probable losses. Exactly. We cannot predict, however, whether these discussions will result in a resolution of these matters. So basically, a billion-dollar company once again fined a small fraction. And I like to make the analogy of like get in a Lamborghini, drive 200 miles an hour down the highway. The first time a cop puts its light on you, just pull over, right? And he's like, hey, you know you were going 200 miles an hour, and you're like, I sure was. Absolutely was. Are you going to take my Lambo now and take me to jail? No, sir. What do you got in your pocket? And you pull out a $20 bill and he says, that's good enough, right? So these fines are never equivalent to how much these companies are making. It's always just this little slap on the wrist. I mean, $26.6 million to me, that sounds like a lot of money. But to a billion-dollar company, it's basically just, we'll just write that one off. It's not too big of a deal. So the reason why I hate Robinhood, a little story of my channel here is that I've had a lot of people request, this was particularly a couple years back, maybe even a few years back at this point, where a lot of people were asking me, what do you think of Robinhood? Do a review on Robinhood, and I never did. The reason why is because it immediately, upon first sight of Robinhood, you can't deposit your own crypto and you can't withdraw your own crypto. You just pay for crypto and then you trade the crypto back and forth and then you just get your money and then you get out. And you could argue that that's like a lot of exchanges, but at the very least I could put my crypto on that exchange, and then if I feel like there's a good arbitrage opportunity or some new token or some new prize or toy to mess with, I can send that cryptocurrency somewhere else. But you cannot do that with Robinhood. Now, although recently they're starting to think about allowing deposits and withdrawals, particularly of Dogecoin and Bitcoin, etc. But overall, Robinhood is a free app, so therefore you are the product, and every time you make a trade on Robinhood, that data goes to the big hedge funds first, so that they can make informed decisions on how to screw you, basically. Now, how the GameStop thing got past them, I don't know. I guess that was a one-off, but for the most part, everything you do on it is just sold. You are the product on Robinhood, and it's absolute utter trash. So moving on here, Mad Money's Jim Cramer has a plan to save GameStop with Bitcoin. I actually kind of agree with this. I find it's a little bit silly, but hey, why not? Because first of all, GameStop used to be the bee's knees. I mean, back in the day, going into GameStop, looking at the PlayStation games and stuff like that, way back in the day, 10 plus years ago, it was a good time. They had older games, they had older systems, all this kind of stuff, merchandise, right? But now, you definitely don't need GameStop at all. You can download your content online, you can buy the games online, you can buy the systems online, and basically you can find anything you want, even better than GameStop, online. So it's a totally pointless store for the most part. I mean, really the only reason why you'd step into a GameStop these days is just the nostalgia, just to like actually look at stuff. And I suppose some people still enjoy that sort of thing. I mean, I certainly do, but we can all admit that it's pretty pointless. So Mad Money Jim Cramer said on CNBC last week that he believes he has come up with a viable plan to help video game retailer GameStop. He said his idea will fix the company's valuation. The GameStop stock surged by 100% last week again after the company announced that its CFO, Jim Bell, would resign. So Wall Street Bets got him again, basically, with another 100% increase. It was something like $40 or $45 it came down to from like something like $480 after the whole GameStop fiasco. And then it just pumped well over $100 again, and then started falling again. So the pump and dump, it just don't stop. It's kind of like Pringles. Once you pop, you just can't stop pumping and dumping. His idea for GameStop to become a dealer in crypto, he noted that it is what Square and PayPal are doing, which he initially thought seemed ridiculous, but then it was okay, which is a weird. Then it was okay, right? And in fact, the PayPal news is basically what brought us from $10,000 Bitcoin to something like 15,000, and then the rest was sort of FOMO after that. But the PayPal news, when it came out that they were actually going to allow the purchase of cryptocurrencies, was absolutely enormous. It was one of the biggest news to ever hit crypto, I think, ever. Aside from like Grayscale itself, which has been around for a while, but they really didn't start chugging along till 2020. Even though PayPal's crypto buying, don't get me wrong here, is pretty pointless considering you can't put crypto on the platform or take it off the platform. And I just said that Robinhood sucks for that. And yes, PayPal indeed sucks for that as well. But we all have to admit the news of PayPal certainly exploded the price of Bitcoin when it came out. So Cramer's the host of Mad Money on CNBC and a former hedge fund manager who co-founded the financial website TheStreet.com. Cramer also pointed out that NVIDIA is coming up with graphics cards for crypto. Last night on the unbelievably good NVIDIA call, as a side note, they talked about March. They're going to have some actual cards just for crypto. It really won't be important for NVIDIA, but it could be important for a place like GameStop. If GameStop were to turn itself into a 5,000 store introduction to crypto, make it so that they sell $1 billion worth of stock and buy crypto with it, and then make it so it's an international gaming place where you win Bitcoin, I think you could justify the stock price. And of course, they could also sell the NVIDIA cards and things like that, like graphics cards. I think it's kind of a good idea. It's a bit of a gamble, but I certainly agree with them. Just basically get rid of the games and then sell crypto, make it like a crypto consulting store where people can hang out, almost like a Bitcoin cafe, and then like sell mining equipment, maybe like sell pre-made mining rigs and stuff like that. That could be quite interesting indeed. And as for the NVIDIA thing, NVIDIA is indeed making a series of graphics cards similar to like the RX 480, like the Sapphire 480s, where they didn't have any ports on the front of the cards. You can't hook up a monitor to them or anything like that. It's just basically for a mining rig, and they're absolutely useless aside from that. You basically can't run games on them because you can't have a monitor port. And that's what NVIDIA is doing. Unfortunately, NVIDIA's RTX 360 series are being purposely nerfed in terms of Ethereum mining. They're going to mine Ethereum at 50% of the hash rate that the card should actually be able to mine. So they're going to basically try to push away crypto miners from the 360 series. And I believe it's only on the 360 series, maybe the 360 Ti too, if that comes out. But not the 3070, etc. too. So it's kind of weird. So I suppose they're just trying to make those for crypto, but then for gamers, and then they're going to make separate crypto cards. So kind of a good idea. I enjoy the idea. Why not? Give it a shot, because otherwise GameStop, you might as well just close your doors. Sorry. Not sorry. Tether allegedly received a ransom note demanding 500 Bitcoin. So Tether, the issuer of USDT, claims to have received a ransom note asking for 500 Bitcoin, lest documents be made public that could harm the Bitcoin ecosystem. So this is a little bit interesting, and perhaps more news will follow after this one. Some sousy drama for the MrSotko cryptocurrency channel, but we'll have to see what happens with this one. Probably just yet more scammers trying to just fake ransom note people, etc. But we'll have to see. Ooh, you know? Tether disclosed the alleged extortion attempt in a tweet on Sunday. So while we believe this is a pretty sad attempt at a shakedown, I'm going to have to agree with that one, we take it seriously. We have reported the forged communications and the associated ransom demand to law enforcement. As always, we will fully support law enforcement in an investigation of this extortion scheme. Tether serves as the important, though sometimes controversial, role in the cryptocurrency market that nobody seems to know if it's actually one-to-one backed. And then Tether kind of lost $850 million. Whoops! It happens, right? All the $850 million. It kind of lost it. Whoops! Down the drain, And so then it definitely wasn't one-to-one backed. But then they were like, hey, it's one-to-one backed. And then after that $850 million fiasco, they say, oh, no, we're still one-to-one backed, but it's not by US dollars, it's by loans and debts and various other collateral. So that's basically like if you borrowed $100 from somebody and then they're like, hey, where's my money? I want my money back. And I'll be like, oh man, somebody owes me $100. So you basically have your $100. I'll just give you an IOU note because somebody else owes me $100. That's not really how it works. Also, what I found comical about this whole thing is that if Tether actually paid the 500 Bitcoin ransom, which is really not that much considering the market cap of Tether here, but would be $22 million, well, then they wouldn't be one-to-one backed for sure, because then $22 million would disappear, and then it definitely wouldn't be one-to-one backed. Oh, Tether and your conspiracy. Oh, Tether's going to be the end of us all, I'm sure. It's fun. We're having fun here in the crypto world, right? We have fun with the fact that they won't be audited and that they're actually not one-to-one back. They say they are, and then they're like, we're kind of not. But we're just having fun here. Tether, it's all good. It's not like it's going to crash and burn one day because of Tether. This is fine. Everything's fine. Moving on to CoinMarketCap here, $1.4 trillion market cap. We're kind of going back up. $46,000. I think we reached a bottom of something like $43,000. Could that be the bottom? I think stocks are starting to turn around. The bond yields of the Fed were going down. So basically what happened is that the bond yields of the Federal Reserve, the United States wanted to do a 1.9 stimulus package, a $1.9 trillion stimulus package. It just got voted by the House of Representatives. It has to go to the Senate next, and then the stimulus goes out, and then everyone's going to put that money on Coinbase and expect a small Bitcoin pump from that, which is going to be great. However, this is very oversimplified, by the way, but basically the Federal Reserve says, hey, we need to raise $1.9 trillion so we can basically go and helicopter money to the American people. So they're like, hey, look at these juicy bonds. We've just raised the yields on these bonds. And stock traders are like, huh? And like a scared gopher. Gophers kind of stand up and, And so they sell, and then they bought the yields, they bought those bonds, and so they sold the stock market, which makes the stock market go down. They buy the bonds and put their money over there. And then when the stimulus goes out, this is my helicopter money, I don't know, in case you guys didn't get that. And then they spew it all over the American people. And then those American people go out to companies and they spend their money, and then those stocks go back up in price. So it's the way she goes, right? So that basically dragged down the crypto market. So they've likely raised their $1.9 trillion or so in stimulus, along with their hefty inflation, likely. And now we'll probably see the market start going back up. I think it really depends on the stock market and the crypto market together. Surely the crypto market can move by itself, but it is highly correlated. If there's a major dip in the stock market, typically people start selling off as well. And this makes total sense because, when these liquidations happen on Wall Street, and we do have Wall Street investors buying and selling Bitcoin now and trading. So they're using the same bots, they're using the same TA, the same buying and selling methods, right? And so when these hedge funds get liquidated by all of the stocks being sold, those same people have to sell Bitcoin in order to pay those investors those liquidations, and so therefore Bitcoin goes down as well. So it's basically a catch-22 that we're in. We want those institutions and people. I never really wanted them because I think it's the antithesis of Bitcoin. It's not supposed to be held by the banks. It's not supposed to be held by the institutions. It's for the people, by the people kind of deal. I hate to use that cliche term, but that's basically what Satoshi was getting at. Hey, we want our own currency so we don't have middlemen, and now we got all these middlemen in there. So oops, sorry, Satoshi. But so we ask for these institutions because we know these institutions have billions of dollars. So they're going to buy billions of dollars in Bitcoin, and they certainly did, buying billions of dollars in Bitcoin. But because we have that, it comes with a catch. It's kind of like a monkey's paw. We said, it's got 3 wishes, and we said, I wish for institutions to buy Bitcoin so it'll go up in price, and it goes right, it goes down. And then the problem is that monkey's paw comes with a curse, and that means now the correlation of the stock market and Bitcoin starts to really collide. So when the stock market goes down, unfortunately, the hedge that was supposed to be the hedge now goes down with it. So hey, welcome to crypto, guys. It's a wild ride. But that's all I have for you guys. Make sure you subscribe to the channel, like the video, share the video. That helps me out a lot. And then in the description below is my social media. Give me a follow on them because it'll be amazing. But that's all I have for you guys. As usual, I'll see you next time.